Hi there, welcome to Kneppy Invest, and welcome to three companies on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 4th of August, intending to release it sometime in September or early October. Okay, so now, what are the three companies I'll be featuring in today's video? The first one will be Nova I. And I have never had a look at this company before, so this is a first. In fact, it is a first for many companies in this series, but not a first for the next company, Spacetalk. Not that I need their products, because their products aim towards kids and families. And when I say families, I mean parents with small kids, which I don't have. And the third company, Aroa Biosurgery. So what I'm going to do in this video is I'll briefly go through what these companies do, and then we'll have a look at the company's Appendix 4C for the June quarter and talk about why I've included these companies in this particular series. And then we'll have a look at the cash receipts history. Can't forget that. And then the chart. Okay, so let's start off with Nova Eye Medical. And I'm pretty sure this company has something to do with eyes. So no, this company is not in the leg fixing category or the nose fixing category. I'm just assuming this company has something to do with eyes, made for ophthalmologists, which again, something to do with eyes. Apart from that, I have no idea what they do. So whenever I don't know what a company does, I'll either go to the company's website, or I might just have a look at the most recent announcement a company releases. Because a lot of times, so if, for instance, if you open up their Appendix 4C, most times you will see an About section. And the About section can give you a lot of really nice information. For instance, Nova Eye Medical is a medical technology company that develops, manufactures, and sells a portfolio of proprietary ophthalmic treatment, I had to think about that one, treatment technologies and devices used by eye surgeons globally. These technologies include eye track advanced, a minimally invasive consumable glaucoma surgical device. Seems like they have a few devices here. In fact, on their website, you can see eye track. Here it is, eye track and Molten 03. Okay, so of course I don't understand this technology because I am not an eye doctor, or what do they call it, ophthalmologist, whatever it's called. So iTrack combines a process of 360 degrees catheterization and pressurized viscolidation. Okay, straight over my head. So again, there's no point going through all this. So they try to fix eyes, that sort of thing. Okay, so let's have a look at their Appendix 4C. Why have I included this company in this particular series? Well, if we go straight to the cash receipts and whether or not the company is operating cash flow positive, you might notice that even though the company has $8.7 million in cash receipts, they're actually operating cash flow negative. And if a company is operating cash flow negative by almost $1 million in a quarter, more than likely it won't be featured in this particular series. But there is a reason I decided to have a closer look at Nova Eye, and that has to do with their commentary. So I'll go through the commentary in a second. Now, of course, I always have a look at section 2 and 3 just to see if they're burning through cash in those parts. So investing and financing activities, not a lot, a little bit, but not a lot. So they are definitely free cash flow negative by over $1 million in the quarter. Have plenty of cash, $5 million, but if they still burn through this amount of cash per quarter, that's like 4 to 5 quarters of cash on hand. And that is important because if they keep burning through cash, eventually they'll have to do a capital raising. No debt. I love when a company like this has no debt, because debt kills. Well, it doesn't always kill, but debt can kill. In fact, the biggest killer of companies is debt. Okay. And I don't think they have to answer question 8. No, they have 6 quarters of funding based off the operating cash outflow. So they don't have to answer anything in question or section 8. Okay, so let's have a look at the commentary. Why am I having a closer look at this company? By the way, they did do a bit of an amendment. So they made a slight error in section 5.5. Okay, so sometimes you will see that companies have to do or release an amended quarterly or amended announcement, in fact, because they do something wrong, slightly wrong. Anyway, okay, so why am I talking about Nova Eye right now, and why am I talking about this company when I've never talked about this company, even looked at this company in the past? Well, it all comes back to highlight point number 5. So they talk about full-year revenue. Glaucoma segment generated positive EBITDA in the second half. Group cash outflow. Financial year 26 sales revenue forecasting, which I always like to see. And then, by the way, 32 to 37 million, nice increase from last year, last year, which was 29.2 million. But here is where it gets a little bit interesting. Group targeting break-even EBITDA in the first half of financial year 26 and continuing cash flow from operations improvement. So they're not talking about being operating cash flow or free cash flow positive. But I'm expecting that this company might be moving toward that inflection point soonish, maybe rather than late-ish. So that does intrigue me about Nova Eye. And again, in my introduction, I said companies that release interesting or intriguing. And that is definitely intriguing for me. They also talk about revenue from different parts of the world. So USA, Germany, and the rest of the world. So it looks like they're focusing on USA and Germany. Also China as well. There you go. In fact, they've broken it down, sales ex-China and then China. So maybe they're focusing more on China. They're also talking about gross margins. Looks like that's improving. Cost of goods sold, revenue. So these are things I like to look at. Group cash outflow from operations. It's on the downtrend, exactly what you want to see. So they are moving towards that inflection point. And they also have financial year 26 guidance. And again, they just mentioned that cash flow from operations will or is expected to improve. So maybe a company to put on your watch list. Now, what about cash receipts history? Well, this company has only got 4 quarters of cash receipts. Now, this company has been around much longer than that. And they were not required by the ASX to issue Appendix 4Cs, but now they are. So we now have 4 quarters of history. So you can't really decipher anything from these 4 quarters just yet. But there was a nice rise in this quarter from the previous quarters. But there could be some seasonality, and we don't know that yet. There could be seasonality, we just don't know that yet. So not much I can really take away from the cash receipts history. Now onto the chart for Nova Eye. Is this looking interesting or not? Oh, this is where it gets exciting. Is the market starting to take notice of this company? And we've had a moving average crossover. And it's interesting. We'll have a look at the weekly chart first. In fact, in the weekly chart, share price has been in a long-term downtrend since about 2016. So it's only about 9 years where share price has dropped from $1.50 down to 14.5 cents, so dropping 90%. And yes, it's been a well-defined downtrend since then on the weekly time frame. Now, we have seen, in fact, if you have a look at the weekly volume, we have seen a pickup in volume since April 2023. So that could be a good sign. Very little volume before that, and all of a sudden increase in volume. But we haven't seen a price react to that increase in volume. Now, maybe we might see something a little bit different in the daily chart. And we do see something subtly different. We have a moving average crossover. And also, we really started to see volume increasing also in February, March of this year. There was a big bunch of increased volume near the bottom. And share price started to turn since then. And then we've seen a subtle increase in volume in June and July as well as the moving average crossovers or moving averages have crossover. And the share price, the chart looks okay right now. So things might be looking a little bit more up for Nova Eye, even though share price has dropped 90% in the last 90 years. So interesting chart. And I definitely have this in one of my watch lists, but I might put this in my breakout alert watch list. I think it deserves to be in that watch list. Okay, so that's Nova Eye. Now onto Spacetalk. This has nothing to do with space, nothing to do with astronauts, nothing to do with SpaceX. This has to do with watches. In fact, you can see a lot of watches on their homepage right there. And the way I think about this company is they provide watches to kids for safety, something like that. Anyway, say hello to Spacetalk, safety at every stage of life. I'm not sure that's exactly true. I'm pretty sure this is aimed towards kids. There we go, Spacetalk, Australia's #1 kids smart watch. There you go. When I was growing up, we didn't have anything smart. There was no smart watches, no smartphones. We needed a smart brain. Maybe that's something lacking in today's children. Maybe, I don't know. Although evidence does show that intelligence does increase in each generation or something like that. Anyway, maybe that's different now. Anyway, so this company provides smartwatches to kids. to keep them safe from predators and stuff like that, I suppose. That's about it when it comes to this company. I've looked at this company in the past and I've never really come away being overly excited. So there was something in this particular Appendix 4C that did make me slightly change my mind, maybe. But I have included Spacetalk in this particular series. So let's have a look at their Appendix 4C. I don't think they are operating cash flow positive. They must be getting towards that point, however. So let's see if I am right. And here we go. Receipts customers 5.3 million. I think it must have been the increase in receipts because receipts in this particular quarter, 5.3 million, and for the year, 18.8 million. So a nice little increase in receipts in this particular quarter. And operating cash flow negative by 383,000 for the year, almost 3 million. So definite improvement in this particular quarter, but still operating cash flow negative and also free cash flow negative by a fair amount as well. So maybe things are looking a little bit more positive for this company based off that. They looks like they did a little bit of a capital raising. They needed it, looks like, because they only had $1.16 million of cash before this quarter started. Now they've got 1.148. So cash has fallen, even though they did a capital raising. So that's something of a little bit of a red flag, but not massive. But they still don't have much cash. And they do have a little bit of debt as well, $4.6 million of debt. So that's also a little bit of a red flag I do have. The facility in place is a term loan from Pure Asset Management, or Pam Beasley, with the following key terms: interest rate of 9.5%, maturity date March 2027. There you go. So I always like to have a look at the particulars of the debt. I have seen some interest rates of 20% or more for small companies. They probably don't have to answer question, or very close. They have 3 quarters of funding available based off their cash burn in the last quarter. And if it's 2, they do have to answer section 8.6. What about commentary? So they're just talking about paid mobile subscriber growth. I would also say, based off the very fact that they do have subscribers, that they do have this recurring revenue. And hopefully the recurring revenue means the cash receipts would keep on increasing quarter after quarter. Maybe not in a straight line, but that's something you want to see. So annual recurring revenue grew to 12.1 million, up 25% from 1 year ago. So nice growth in annual recurring revenue. They also talked about revenue for the quarter increased by 0.7 million to 5 million, so up 15% from the previous corresponding period. Positive net cash generation from operating activities before inventory growth. Okay, so what they're saying here is you probably need to also look at working capital changes. So they're increasing their inventory, and that is why they were operating cash flow negative for this particular quarter. In fact, if you have a look, so they're saying that product manufacturing and operating costs at 3.3 million. Yeah, that's a little bit higher than what we have been seeing this company spend in the previous year. So only $9.3 million for the year, $3.3 million for this quarter. So that's one of the reasons why they were operating cash flow negative, because they're actually increasing or putting more money into their inventory, and that is working capital. And a lot of times you don't know that. Sometimes you need to know what you're looking at, and the very fact they've pointed that out is good. I like that. I do like that from Spacetalk Management. In fact, they mentioned that in the next bullet point: strong increase in inventory and service-enabling purchases due to international expansion. They have some nice growths: paying mobile subscriber growth, and recurring revenue, Spacetalk mobile app, and schools. And yeah, and recurring revenue is growing pretty nicely. Okay, so that's nice growth for this company. Now let's have a look at their cash receipts history. And I'm pretty sure this company was also asked by the ASX to provide or start providing Appendix 4Cs a few years ago. I could be a little bit wrong, but I'm pretty sure that I've been following this company a little bit longer than 2 and a bit years. So this is the cash receipts history. Now there is going to be some timing differences between revenue recognition and receipts recognition. So if you have a look at this just blindly without knowing anything else, you'd be like, I don't know, because the record quarter for Spacetalk was the December quarter 2023 when they had $5.5 million in receipts. And the last 2 quarters have not got above that level of receipts. So you could even say that maybe the quarterly receipts has a ceiling of 5.5 million just by looking at these 9 quarters of history. So sometimes I would like a little bit more history to really gauge how a company is performing, because if you take away that 5.5, I'll definitely say there's some growth here. But the last 3 quarters have been quite good. So 3 of the best 4 quarters in the last 9. So things look like they are moving in the right direction for Spacetalk. And if they do increase their inventory because they're expanding overseas, and they could be operating cash flow positive soonish rather than lateish. Now let's have a look at the chart for Spacetalk. SPA, easy to remember. Nothing really to like on the daily chart. In fact, or no, you could say at 14 cents, that's like the low for this company in the past year a bit. If you have a look at the weekly chart, nothing much to like here at all. A bit of hype in this company in 2019. Share price got to $4.20. Not sure if it was Spacetalk then. I have a feeling it wasn't called Spacetalk. By the way, this company, I should have said this. NovaEye has a market cap of 41 million. Spacetalk has a market cap of $10.6 million. So it's fairly small. And what I'm going to do is just going to go back a few years just to see if this company had a different name. I'm pretty sure they changed their name. I'm almost certain this company changed their name. So what I'm going to do is just go back a few years. In fact, we'll go back to 2019. They were actually called Spacetalk back then. Oh no, MGM. That's right. Yeah, MGM Wireless. Now it's all coming back to me. MGM Wireless. That's right. Yeah, it's all coming back to me now. So they used to be called MGM Wireless. Then they changed the name to Spacetalk because Spacetalk was their technology or whatever, their mobile phone. Okay, that's Spacetalk. Actually, no, we'll go back to the chart, because if you have a look at the weekly chart, share price has been going sideways for about 2.5 years, and in the daily chart, you can just see the share price just going sideways, and around about 14 cents is a bit of a flaw in the share price. So we'll say between 14 and 16 cents. So with the share price at 14.5 cents, it could be a low risk buy at these levels, with the potential of maybe share price doubling in a fairly short period of time. And we have seen that a few times in the past with Spacetalk. Anyway, so near the bottom of the all-time share price for Spacetalk. Okay, now on to Aroa Biosurgery. And this is the only operating cash flow positive company in this particular video. Unlocking regenerative healing for everybody. So the medical company, I have looked at this company extensively in the past, and they have technology called Myriad. So Myriad Matrix, surgical soft tissue reconstruction and complex wounds, and the rest of it's just gone bye-bye. So Aroa Matrix, Myriad Matrix, Myriad more cells fine, Symphony, which I don't know, reinforced scaffolds. What is Symphony? Symphony is a combination cellular and tissue product comprising multiple layers of Aroa ECM with hyaluronic acid. All this is going over my head. So they heal wounds. That's probably the best way to say this company heals wounds with their technology. I remember going through this many years ago, but it's all gone. It's my brain just pushed that out, all that information out. Okay, so this company is bigger as well. I'm disappointed with myself that I forgot to look at the market cap for NovaEye, but Aroa Biosurgery has a market cap of $212.2 million. So there is a little bit more potential price into this company, and I think for obvious reasons. Okay, so let's have a look at this company's Appendix 4C, and why am I talking about this company, or have I included this company in today's video? With the share price pulling back a little bit, could be an opportunity. Okay, so I've been following this company for quite a few years now, and I think this company has hit the inflection point. I'm going to call it right now. This company has hit the inflection point. We'll look at some of their commentary in a second. Receipts, 22.5 million. Operating cash flow positive, 1.7 million. Now, this was the company's first quarter, but they have been operating cash flow positive for a few quarters now, and they are also free cash flow positive by about $1.5 million. Cash on hand is about 22.2 million, so plenty of cash on hand. Don't have to worry about that. And debt, $609,000. So $22 million of cash, $609,000 of debt. This company is not going bankrupt anytime soon. anytime soon. So that's exciting as well. And if we go to the commentary, I'm pretty sure they do mention, third consecutive quarter of positive net cash flow. Operating cash flow of 1.7 million for the quarter. Strong cash receipts, total cash at hand, and financial year 26 guidance reaffirmed with revenue of between 92 and $100 million New Zealand dollars, which means 5 cents Australian, and normalized, I'm joking, of course, I'm joking, and normalized EBITDA of 5 to 8 million New Zealand dollars. So things are looking pretty good for this company, in my opinion. Okay, so now let's have a look at the cash receipts history of Aroa Biosurgery. I think just by the name, you should know this company is New Zealand based. I think that was pretty obvious by the name. Maybe it's not. So this is the company's cash receipts history, going back to, when was it? Middle of 2020. And this is exactly what I'm looking for in a company. Thank you, Aroa Biosurgery, to show me exactly what I'm looking for. Even though I don't own Aroa Biosurgery, this is exactly what I'm looking for. Beautiful increase in cash receipts over time from 4.5 million in the September quarter 2020 up to 22.5 million. Now, of course, receipts don't grow every single quarter, but they're growing. And this past quarter was a record quarter for the company at $22.5 million in receipts. Okay, so now onto the chart for Aroa Biosurgery. And very close to actually trading Aroa Biosurgery recently. If we have a look at the weekly chart, we'll start off with that. I can't remember when this company listed. It must have been 2020. I'm just going to guess. Yeah, so that's July 2020. And interesting enough, the share price has dropped a fair bit from when they listed. In fact, I have put this downtrend line in to the system. In fact, this downtrend has been going from when they listed all the way through to now. So nice, well-defined downtrend for Aroa Biosurgery. So if you just look in the weekly time frame, the share price is still in that downtrend. So you might get a little bit different perspective if you look at the daily chart. I've still got the downtrend line in. Share price has moved into at least a short-term uptrend. The company has released positive quarter. But on occasion, the company or the market will be disappointed by Aroa Biosurgery's quarter. And this happened back in January. On the 29th of January, the company released the December quarter results. Market didn't like it. Share price dropped 24.4%. And that was a trend killer because the share price was actually in an uptrend. And fun enough, the share price, the day before they released that quarterly, hit the downtrend line. There you go. Leo. So just because it was a good quarter doesn't necessarily mean the market will love their next quarter. But things are looking quite positive for Aroa Biosurgery. Okay, that's all I have for this particular look at 3 companies who release interesting or intriguing Appendix 4Cs for the June quarter. Nova Eye, with a market cap of $41 million. Spacetalk, market cap of $10 million. And Aroa Biosurgery, probably my favorite of these 3 companies, with a market cap of $220 million. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.